President Trump touted the strength of the economy, and he alluded to the strong GDP number yesterday.
We've never seen anything like going on right now. You could have very big numbers announced tomorrow. I don't know what they are, but a lot of big predictions. I think they're going to be terrific. You know, we took over. It was really low, and it was heading lower, a lot lower, and it was going to be there fast. And great things have happened.
Joining me right now to talk more about that, Fox News contributor, former senior advisor for President George W. Bush, Karl Rove. Karl, good to see you, my friend.
Good morning. And look, I want to get started on a positive note. I'm willing to contribute $5 to the Zuckerberg Relief Fund if make sure the lad gets a nice lunch today. So $5, count me in.
Oh, goodness. Listen, he's still a multi-billionaire, Karl. So let's not go crazy on this upset for Facebook stock. But what's your take? And I want to ask you about that because your reaction to what we're seeing in terms of the censoring of conservative ideas on Twitter, on Facebook, and this backlash that these companies are now facing.
Well, I think that's a part of the story. The bigger part of the story is the vulnerability of our tech companies. These tech companies have grown so fast. The expectations are so high. They've got so many things that they have to deal with, whether it's concerns on Twitter about conservatives being sort of dislodged and pushed to the side, or Facebook, where the question is your privacy rights. So all of these very many issues that they face, I think, have demonstrated the vulnerability of these once thought invulnerable big tech companies. Yeah,
and we'll see if there's a heavier government hand in terms of regulation as a result of some of this. They're going to be testifying in front of the Senate, Sheryl Sandberg and others. So we'll watch that. But let me ask you about the GDP and the economy, Karl, because when the president comments on economic data before it's actually released, it's usually an indicator of a strong report. What are you expecting?
Well, he doesn't know what the number is. When he talked yesterday in Granite City, I want to be clear, he had not yet been informed. He was probably informed maybe sometime this morning, maybe sometime late last night, but presidents are not supposed to talk about that number publicly once they're given it. So my suspicion is he was looking at the same data that we've all been looking at. April, May, and June, capital investment in capital goods excluding aircraft up dramatically. April, May, June, retail numbers up significantly. So this is going to be the first GDP number that's going to be actually have all of the regulatory reform baked in and see the beginning of the impact of the tax reform measure. So we've seen estimates from 3 to 5. The consensus appears to be just around 4, just slightly north of 4. And this is going to be a very good number. Ironically, I'll tell you politically, this is you can't just bask in the glory of the moment. I've been through a couple of these moments in the White House myself, and there's an ironic thing. When the economy is really going good, they pay momentary attention to good news like this, and then they sort of say, well, the economy is doing good, I'm on to other things. So the administration needs to not only sort of say, well, look at the good results of our policies, but, oh, incidentally, here are some additional things we want to do to keep our economy going strong, because there's a real temptation by ordinary people to say, I'm banking that if the economy's good, now I'm looking at other things that concern me.
Yeah, but that's the thing. I mean, we talk about this every morning, and that is trade. And we're wondering if these tariffs and trade are going to have an impact on this number, Karl.
Well, in fact, the people over at the American Action Network say one thing that might be baked into these numbers is that the companies were afraid of the impact of tariffs, so they forward ordered. They said, okay, I'm going to need more steel and aluminum, so before that tariff gets put in on steel and aluminum, I'm going to pre-order. There are things that might be coming from China where I want to get ahead of the tariff so that I get these. So there may be some, and we'll see that in the inventory numbers. But, yeah, there's some instability there. The president this week with the EU deal where he changed his rate. No longer is the EU a foe. Now we're going to be allies together in reducing tariffs and tariff barriers, non-tariff barriers. And we're going to be also, I thought, largely passed over in public comment, but really important, the EU and the United States are going to be working together at the WTO in order to rein in China's trade abuses. So good news on that front. But you're right. This number, the last quarter, there have been, this was the quarter of talk about tariff wars wars and trade wars, and that's going to be reflected maybe to the good in people pre-ordering, but also reflected in the ongoing with people being concerned about what the economy is going to look like in the months ahead.
But look, Dagan has pointed this out correctly, like the Wall Street Journal editorial board, like 24 lawmakers who are up in arms and have been yesterday, that these tariffs are cutting into growth. Correct, Dagan?
They are, Carl. When you have the president essentially at a campaign rally, as he was yesterday, bragging about the steel industry coming back, I can't help but think, what about all the industries that will be hurt by the higher price of steel? Small businesses far and wide, people whose costs have gone up, their supply chains have been disrupted, whether they make kegs of beer or nails or even school lockers. And then you've seen in these earnings reports this week, both Ford and General Motors came out and talked about how much that they've been hurt by these higher costs, each saying that commodity prices have shaved $300 million from their second quarter results. Even Coca-Cola is raising prices. So politically, you need to be careful about crowing about one industry and then basically ignoring all the ones that are basically not your favored business.
Yeah, well, look, I couldn't agree more. If somebody has to pay that tariff, the tariff's not being paid by the people abroad. It's being paid by us here, largely in the form of higher costs and missed opportunities and lost jobs. If you're going to raise the price of something by 25%, which is what has happened with steel, there are going to be some victims of it. Same with ag products. The president talked yesterday about how the EU is going to buy a bunch of soybeans. Well, the markets have not yet reflected that because the cost for soybeans is down. Since the Chinese canceled the contracts, soybean prices have plummeted. So have pork prices, which when the Chinese retaliated on us by placing tariffs on pork. So I'm with you. That's why maybe I'm hanging on the good news more than I should. But the president has finally revealed he had three choices. He sounded sometimes like a mercantilist. There's no good trade deal unless you buy more from us than we buy from you. Sometimes he sounded like a rules-based trader. You know, everybody ought to abide by the rules. But this week he sounded like a free trader, and we got to lower all tariffs and obstacles to trade to zero. And frankly, I like that. And it's going to mean that we're going to have trade deficits. We're running a trade deficit today with Nicaragua.
Good to see you, sir.
Because they grow bananas and we don't.
We will see if it sticks.